Welcome to the Insurance Producers Podcast, where we bring you the top personalized producers, insurance agents, and industry partners, giving you at least 3 takeaways to 10x your production and build your multi-million-dollar revenue books. So sit back, relax, and become inspired by the success stories and strategies of the world's top insurance minds. Let's roll. All right, guys, welcome back to the Insurance Producers Podcast. It's good to be back. We were at Indie Tech having some fun with a lot of good friends and people I met for the first time that I've known for a long time, and obviously one of them being for the first time we met in person, Mr. James Jenkins. What's happening, buddy?
Hey, man. Thanks for the invite. Look forward to chopping it up with you guys.
Absolutely. Good to have you, man. So for the first time I met James and a bunch of people. As crazy as it sounds, James, that was my first actual insurance conference ever.
Really?
First time ever.
Yeah.
So a lot of the people, it was my first time meeting them in person, even though I know a lot of them from different places, but it was fun. It was definitely fun. Obviously with the hurricane, it kind of put a little bit of dent. But prayers to them, man, to North Carolina, South Carolina, and obviously Florida.
What a wild place, man. I don't know in all my years if I've seen that much damage that far inland from a hurricane making landfall. Some of the pictures I've seen in the Asheville region in western North Carolina is pretty traumatic, honestly. It was just entire communities just wiped out.
Yeah.
So, yeah, it's a good reminder of the importance of what we do, right?
100%, man. I mean, people were asking me about that. They were like, how is this going to affect me? Right? Like in Nebraska, for example, or where you are. So like, I was like, well, I mean, it's a pool of it. I mean, a lot of it is the flooding, right? Yeah. So what I understood was a lot of it is flooding. A lot of it is obviously a lot of cars and stuff. Obviously comp claims and all that stuff will pay out, right? So insurance companies obviously have to do that. But how do you see this, man, affecting the insurance industry long term?
I think it's just another nail in the coffin for 2024. We had a pretty bad storm season during the spring in the Midwest, Texas, Oklahoma, Kansas, Nebraska. All the way up into the Dakotas. It was a lot worse than predicted as far as the frequency and severity both of severe weather events. Wildfires, thankfully, have taken a bit of a break this year. It hasn't been a really bad fire year in California. There's been some, but not nearly as bad as in other years. Unfortunately, I think really what this does is put off some of the market rebound that we were all expecting and kind of hoping in 25 and 26. It probably puts it off another 12 or 18 months in certain parts of the country, in certain lines of business. Sure. Like you said, most of the losses are going to be isolated to flood and auto. There's going to be, depending on how business policies are written, there's going to be a lot of, business income, BI and extra expense claims, depending on if they're excluded or not. And then, of course, consequential property endorsements. A lot of these businesses that have a physical product of some kind, if the warehouse where they get their product from is underwater, they're not getting their product for a while, which means we're going to have dependent property business income claims out the yin yang for anybody who had a dependent property located in one of these affected areas. So it's kind of a spider web, man. On the commercial side of things, there's a lot more complexity to it. With personal lines, it's either had flood or you didn't. And unfortunately, kind of like what we saw in the Houston area with Hurricane Harvey back in 2017, a lot of these folks that are in an X flood zone where you don't ever see flooding. It's a once every 500 years flood zone. These folks are getting devastated because the adoption rate of flood insurance, which unless your lender requires it, if you're not in an A flood zone or an AB flood zone, chances are you probably didn't buy flood insurance. There's thousands and thousands of folks that are in an X flood zone that got wiped out because nobody expected to see 40 inches of rain being dumped in areas here. So unfortunately, not to put my prognosticator hat on, but I think the spider web on this one is probably going to have a longer tail than we wish it did.
For sure. No, I think it's unfortunate. But you know what? We always bounce back, man. One thing about the insurance agents and the insurance companies, man,
Yep.
they always find a way. I mean, we have had 6 hail claims and a big tornado that came through and ripped our town, man. I can't think of one carrier right now in my agency that is less than 100% loss ratio anywhere close to it in Nebraska.
Yeah.
It's pretty
Well, and
wild.
most of these carriers have a rolling 3-year picture
Hmm.
for contingency and profit sharing bonuses. So, any agency that's used to getting contingency or profit sharing, you're probably not going to be getting it for a while.
Yeah.
So, yeah,
Yeah. It's
everybody's going to
unfortunate.
feel the pinch. But obviously, our biggest, thoughts and feelings and prayers go out to the folks that are directly impacted by this, because you and I have a profit margin that is
Yep.
impacted. A lot of these folks have their very livelihoods that are just
100%.
devastated. So,
Absolutely, man. So let's go to James, Mr. Jenkins. Okay, so give us a little background, my man. Give us a little back how you got into the industry. Just a really quick 60-second, how
sure.
things are going, where you're at.
The short answer is I was disillusioned and frustrated, disenfranchised, if you will. It's kind of a big word, with corporate America. This is going back to the summer of 2012. I had 3 bad bosses in a row, and I came home from work one day, and my wife was like, "Okay, sit down." And for those of us that are married, that's never a good conversation. You're about to get the lumber across the face. And she basically said, "I love you, but I don't like you. You're not any fun to be around." And then she said, "You're a black hole of negativity. You are not fit for corporate America. You need to be your own boss. Go out and figure out what that looks like and come back and talk to me." And I did. And we picked insurance after a lot of thoughtful deliberation and prayer and reflection. We settled on PNC Insurance, opened a farmer's agency in Dallas, Texas. Did that for about 4 years before I realized that, wait a second, I'm not cut out for this. The captive agent life, really, it doesn't suit me well. Anybody who's seen any of my content on my podcast or anything else that I put out, I don't really fit the mold. I play well with others as far as like other independent decision makers. Like, I'm a good colleague,
Mhm.
I'm loyal, I'm a good peer. I don't respond well to institutional authority.
Mhm.
I don't like being told what to do. I think a lot of entrepreneurs can resonate with that. But I sold my farmer's agency and went independent in 2019 and started Riskwell and haven't really looked back.
Rest is
It's outside the scope of this conversation. Had an anxiety episode, a panic attack, November 6th of last year. Started on anxiety meds, and 23 was the first year since we opened that we didn't hit our growth target.
Mm.
But 24 has been a wonderful rebound year. I'm extremely grateful for my team around me, my wife, and my folks here that work at Riskwell. We have obliterated our goals already for 24. I'm realizing I underestimated our ability to bounce back, because
Mhm.
Q4 of 23 was really just devastating. It was the worst 3 or 4 months of my life.
Dude,
So for us to be able to come back, as we sit here recording this on, the second day of October in 24, and we've already, well ahead of pace for our annual goals. We'll probably hit our annual goal mid-November. So everything that happens in December is just, candy. So just extremely grateful to see the way that 24 has turned out.
that's awesome. That's awesome. I really want to ask you about the farmers' days, man.
Yeah.
What did that teach you? I guess what's the number one or two things that maybe being a farmer's agent taught you for the independent channel to be ready?
Just about the only thing that the captive channel does right is training and education. They took a guy who didn't know anything about insurance,
Mhm.
literally nothing. I was a consumer of insurance. I had a renter's policy and personal auto, and that was it. I couldn't have told you anything about the industry when I decided to get into it.
Mhm.
And farmers took a guy who knew nothing, was new in town, no natural market, no channel partners, no book of business, no capital to just throw into buying internet leads or whatever a fast start plan would be. And, over the course of a year and a half or 2 years, I got up to full speed, working 70, 80 hours a week, obviously.
Mhm.
But farmers training was fantastic. And it really showed me the importance of making sure that a team is prepared, that they have the resources that they need to be successful. Because when you step out on your own and you're independent, there is no playbook. You don't have any rules to follow. You set the rules. So having an idea of this is the way we do things here, I think is just so critical for every agent, every agency principal, I should say, to be able to paint the picture for every single person who joins your team. Hey, this is the way we do it in service. This is the way we do it in sales. This is the way we do it in operations, processing endorsements and claims and cancellations and all the nuts and bolts things, making sure that the trains run on time. I don't know if you can be successful if you don't have a plan or a playbook, if you will, that, hey, this is how we do it here. Because there's a million different ways to do any process under the sun. You and I do things differently. You pick a subject, and Cyrus and James do things differently. So I think that playbook is essential. The front end training, farmers did really well. The playbook, they did ever so poorly. They try to crank out robots, man. They want every agent to look and sound exactly the same. And obviously that's not a recipe for success, in my opinion.
100%. Well, I come from State Farm, and I left 2019, just like you, to come on the Indie channel. Started with State Farm in 2013. So 6 years there. And it's great training, like you said, but they almost make you drink the Kool-Aid for so long. And you don't know any better, right? They don't want you to go hang out with independents. They want you to be in your own world, and they don't want you to see anything outside. And I'm one of those guys like you, man. I like to poke into the bubble and say, "Hey, what can I do different?" So what did you? So I know what you do right now on the niche side of things, and I really want to talk about that, man. Because why did you pick the niche that you picked, and how that's going for you?
I kind of stumbled into it on the front end before we had framework around what makes a good niche and how we can be successful at it. Back when I was a farmer's agent, I had a client who was home auto umbrella, just your typical high-end personal lines account. And then he calls me up and was like, hey, I have 9 rental properties. Can you help me out? And at that point in my career, 9 rental properties and a home auto umbrella, well, that's a great account. I was all about that. And that was the first time we'd ever worked with a professional real estate investor, not someone who's just mom and pop. Oh, I've got a rent house, but someone who actually had an operation where they have structure around their real estate investing activities. And we won the account. We placed it with Foremost back in the day, like a good little farmer's agent. And the revenue on that account was about $2,500. And at that point, that was a big old account. And it was easily top 5 in my whole agency. And that was my entry point into real estate investors. And I realized just from talking to this guy, I was like, can I take you to lunch? And we're sitting down at lunch, and I was like, I'm going to be real with you. You're a dream client. If I could have 100 of you, I would die happy. How in the world do I find more people like you that think like you, that buy like you, that are loyal like you? And he introduced me to some friends of his. And over time, it just became obvious that, oh, I really like this. I think we're going to do this because the money was good. The service volume is pretty intensive. Real estate investors are needy as a category.
And they want it now.
They want it right now. They always wait to the last possible second. So we had to build a framework that catered to a particular population that was underserved. And what we've realized in the last almost 6 years of doing this and writing more than 27,000 investment properties across 30-something states is the way to do it. It's built on speed and efficiency and client experience, and the client's right. If there's a difference of opinion, we have to figure out how can we adjust within the machine that we've built. How can we adjust our communication, or occasionally how can we adjust our process to better fit the needs of our market? And some of the prideful elements of being a business owner and saying, well, we're an assembly line. We're like a Ford truck plant in Michigan. You don't mess with the middle of the assembly line. You do it this way, and you do it, and you only make the appropriate level of profit through speed and efficiency. And that's the wrong way to think about it. Up until about 2 years ago, that's the way I approached our niche was, this is how we do it. And if you don't like it, go somewhere else. And then, I read a few books over the years, and it was like, no, you have to meet the client where they are. Sometimes the client needs to adjust, but even the clients that are unreasonable, their tone may suck, but you can extract real useful information out of an unhappy, unreasonable, rude client. And that side of the niche of realizing, oh, you know what? We can make this literally whatever we need to make it. That was probably the best part. You asked, how did I decide on it? As I've given a lot of keynotes and breakouts and whatnot over the years, the framework that we've settled on is really 3 parts. And it comes down to, you have to have some kind of prior knowledge. You have to have some kind of interest or existing experience in whatever the vertical is. Maybe it's a hobby. Maybe it's something you've done in a previous job in your career. Maybe it's a family member who works in that industry, or a best friend or whatever. You have to have some kind of awareness to be able to speak their language, to be able to understand their pain points and really get inside the head of the people that are, key decision makers in that industry. Oh, excuse me. Sorry. Didn't mean to burp in the middle of the podcast. That was weird. That's what I get for drinking Dr. Pepper Zero. There you go. Same Dr. Pepper taste, 0 calories. No.
Commercial.
But the second thing is there enough juice in the orange to make it worth squeezing? There's really 2 things that you can do to increase or decrease the sample size for a given niche. You can either, filter down more, put more qualifiers on the niche, in order to get it down, or you can adjust your geographic, criteria. What is your range from your office? Are you going to be niching just in the local area? Is it regional? Is it statewide? Is it multi-state? Is it national? And figuring out what the ideal number of prospects are for the niche that you're trying to decide on. For instance, if you said, I'm going to work with steel fabricators that have a warehouse of at least 5,000 square feet and payroll of at least $500,000. And I'm going to do it within the state of, pick a state, Ohio, whatever. Your sample size for your niche is going to be incredibly, incredibly small. But if you are a little bit more specific, either in the filters that you're using or in the geographic area, you can nail down what is an ideal sample size for your niche. For some people, that's going to be 100 prospects if it's larger accounts. For some people, it's going to be 10,000 prospects in the entire pool. Obviously, you're not going to close 10,000 accounts. But you got to have enough prospects to make it worth your time. And then the final thing is just answering the question of, where's the money going to come from? And for me, there's really 5 pieces of where's the money going to come from. Do they own their building? Are they likely to own their building? Yes or no? Are they likely to have commercial auto exposure? Yes or no? And HNOA does not count. Are they likely to have meaningful payroll of some kind? And payroll in a class code other than 8809 or 8810, because we all know that kind of work comp, there's no money in that. And then the other one is going to be cyber. Do they have some kind of cyber exposure? Are they a healthcare? Are they a tech-enabled company? Are they a white-collar advisor that has a lot of personal protected information or PPI in their possession? And the last one, and this is one that a lot of people miss out on, do they have a professional liability exposure? Are they the kind of account that needs E&O or malpractice? And I would say bonus, the 6th one would be the management lines, the 4 pieces of management insurance, which is D&O, EPL, crime, and fiduciary. If they're the kind of business that has a high exposure in EPL, crime, or directors and officers, then those are other buckets that almost nobody's going to be calling on.
Sure.
So if you could answer that last question of where's the money going to come from? Because even if you have previous knowledge in an industry, or it might be a good niche, even if the sample size is where it needs to be a good niche, where there's enough meat on the bone that you can prospect in this niche for a while until you run dry and start tapping the same people a second time. If you pass the 2 filters, but then you get to the end and realize there's not really that much money here. Like my favorite industry to pick on is chiropractors. Think about it. The chiropractors and dentists are kind of like yin and yang. They're very similar business operations, but dentists tend to own their building. Chiropractors tend to rent their space. Dentists tend to have good payroll. Chiropractors tend to be a 2 or 3 person operation at most. Dentists tend to have lots of business equipment and imaging stuff. Maybe it's an x-ray machine or whatever. They have lots of specialized equipment in their office. Chiropractors tend to not. There's no commercial auto exposure for a chiropractor. They almost always get their professional liability through their national trade association. You're not going to get a chiropractor malpractice insurance because you can't beat the national program that's run by Aon.
Mm-hmm.
So it just, as I love picking on chiropractors because we can walk through that process and go, where's the money going to come from? And the answer is there's not much money going after chiropractors as a vertical. So there you go. I know that's really detailed, man, but that's my whole process for picking a niche.
That's awesome, man. I love it. And so the way you get the business inside of the organization is through the RDP, right?
Yep.
And then from there, you're digging deeper and finding other places, or was that what I'm hearing?
Yeah, it really comes down to content marketing and getting visibility where and when your target prospect is most likely to want to engage.
Mm-hmm.
So for us, that's trade associations, that is joining groups on Facebook, that is local networking, that is being very visible in places where they are. And once we penetrate a given market, we're asking for opportunities to be a speaker at their events. For instance, one of the things that we really love working with is roofers, roofers and general contractors. And we spent $2,000 to have a booth at the State Roofing Contractors Association back in early September. And it was a huge win for us because we only walked away from that 2 days with 5 good prospects. But all 5 of those prospects are really good prospects with a lot of revenue attached to them. And, so far 3 of the 5 look like they're probably going to pan out. So our ROI, after you factor in labor and materials cost plus the sponsorship, we're probably a 400% first year ROI from a trade show. And all of that is understanding where the people are going to be and where they're likely to want to potentially have a conversation. And the end, if it's not so obvious, like you're at a trade show or whatever, if you're just talking to somebody, is, hey, would you be opposed to having a conversation about your business insurance? And it's literally just that one question will get you in almost every door, because we're not afraid of no. I love a no, because no just means there's not alignment between what I'm looking for and what you're delivering. No doesn't mean F you, pal, go away. It just means I'm not interested in that right now. It doesn't mean they won't be 6 months from now. And I love using some of the language from Chris Voss and Never Split the Difference. When they say, no, there's no need for that. You can say something like, looks like, sounds like, feels like. No, it sounds like you're perfectly happy with your current business insurance experience. Would that be a fair assessment? And just as an aside, like the question, would that be a fair assessment? If you're saying something that sounds like an assumption, if you don't know for sure, then couching it with the question, would that be a fair assessment? Or would that be a fair guess? Something like that allows the prospect the opportunity to gently correct you. Just giving them the power in the conversation and not being so pushy. Because, Cyrus, you know how it is in our industry. We have a reputation as an industry for being really unpleasant, pushy people. And I just anything.
State Farm and Farmers ruined that for us.
They really did, yeah. Because you got a bunch of product pushers that don't know how to actually build relationship and foster trust, and all they do is push product all day long. Hey, you want a quote? Hey, you want a quote? It's like a little parrot sitting on a pirate's shoulder.
I agree. I 100% agree. So, business insurance is what you focus on. What's the team dynamics look like, just so the audience kind of understand?
Yeah. We have, myself included, there's 10 people that work here, and we're broken up into our real estate team and our commercial team. We have a front desk coordinator. We call her the happiness coordinator. She answers the phones and manages the calendar and makes sure that the trains run on time. And then we have 2 team leaders, one for real estate and one for commercial. And then we have 2 one commercial CSR, one commercial producer. And all of our stuff for real estate investors is all inbound. So we don't have any actual producers. We have basically 3 relationship managers, for lack of a better term, where they answer the quote request and they bind business and process service and renewals and all the things. So, and then we have a full-time accounting person who's our most recent promotion. We brought her into that full-time accounting role back in May of this year, so about 6 months ago.
That's awesome. So I'm curious on the real estate side because we work with a lot of mortgage and real estate people. So if people, and obviously a lot of real estate agents have a lot of rentals, right? Like that's kind of
Yep.
what you're thinking. So that's kind of your target market that you're focused on.
Hmm.
I'm assuming those are the carriers like your Foremost, American Moderns, Reinsure Pro, stuff like that. Like, is that what you're kind of focusing on, or?
That is definitely part of it, and we have a
Okay,
couple of markets that are not available to the general population that
got it.
we've massaged and developed over the years. There's one market that is a Lloyd's backed program, and they also work with Great American and Fortegra and American National and some other programs that are paper behind the scenes.
Mm,
And we have we have about 9 million in premium with one and about 2 million in premium with the other one that are not available to the general population. But yeah, to your point, we definitely work with every company that you just mentioned. RE Insure Pro, I'm not a big fan of,
mhm.
just because they stick a lot of fees on there, and you're always competing with their in-house agency, which is National Real
Correct.
Estate Insurance Group, and they don't play fair. I think it's definitely bad faith with RE Insure Pro, because if you put a NREIG quote up against an RE Insure Pro quote, NREIG will win 100% of the time. The
Mhm.
RE Insure Pro independent agent quoting against NREIG will never win, and they've set it up that way. They want to make
Mhm.
sure that they protect their house business. They're not an ally of the independent agent, in my opinion.
You know,
So
that's good. That's good to hear, man. I honestly don't like their product.
no,
I just think the product that they have some things in there that is obviously just completely bare bones. And there are some real estate agents. You got to do some educating to them, right? Like when real estate agents calls us, for example, there's some flips or whatever. They're just like, man, I just don't like having that conversation with them because like the first thing they obviously are looking for the cheapest, right? So
yeah,
you obviously being in where you are and how much you deal with this, you kind of have a system and a process for this, right? For agents
yep,
that don't do this on a daily basis, we don't like it, but for them, the beginning, I'm assuming when they call you, they're like, hey, listen, like if you're going to be that guy that's like all about price, it's a couple of properties, man, I'm not your guy.
yeah, and having that conversation up front to pre-qualify these prospects and just get buy-in from them on the rules of the game according to them. Let's make no bones about it. The prospect gets to set the rules of the game.
Mm-hmm.
And we have our way of doing things, of course, and we think we're very good at it. I'm not going to say we're the best, but I'm not aware of anybody else that's better than us. Let's put it that way. And we're
Mm-hmm.
as good as any other office in the country. But at the end of the day, the prospect is still in charge. They get to
Yep.
set the rules of the game. So hearing from them as early as possible in the process of what are the rules of the game? What do we need to do to win? And it usually starts with just a simple, hey, what's going on? What can we help with? Just a really open-ended question.
I agree.
And then my favorite follow-up is, of course, you want a good price. So other than price, how are
Mm.
you going to make this buying decision? Or where are you in the process? Have you already interviewed other agents? Have you got other quotes? Like, help us understand where you are right now. If we deliver you a competitive quote, are you ready to accept it and move on? Or are you still just getting a bunch of quotes and then pick the lowest, cheapest one and move on? And we call a spade a spade. I don't have any
Mm.
problem saying, are you the kind of client who's going to pick the cheapest option 9 times out of 10? Or do you care more about value than getting the absolute cheapest price? And asking them up front, hey, how's it going to be?
Mm.
Which one are you going to pick if they're both on your plate? Because then whatever they say, you can remind them of that later if they act in a way that is inconsistent with the way that they
Mhm.
told you the game was going to be played. Because people, it's human instinct to have a
Yep.
problem with cognitive dissonance. When there's inconsistency between our past self and our current self, it's human nature to not enjoy that situation.
Mhm.
When you are contradicting what you said in an earlier conversation, most people really can't handle that.
Agreed. Agreed. Do you have certain questions? Like, for example, on the personal line side, we want our agents to ask 7 questions. And these 7 questions is just we came up with things we ran into, different things that we did, studies that we have done, past data that we think is going to give us some answers that we need to figure out, is this really a client we want to spend a lot of time on, or is this one of those clients that should probably go to a captive agency, for example? So, or do you have certain questions, an amount of questions that the team has to ask? And if so, what are they?
Just
If
the
you don't mind
basic.
sharing.
I don't have any problem sharing at all. That's what the whole point of this podcast is, right? Is
Absolutely.
for people to get nuggets so they can apply in their agency and make more
Yeah.
money and serve their clients better. I think there's a huge distinction that is lost in most people, most agencies, between discovery and fact finding. Fact finding, in my opinion, is the questions that you have to fill out to complete an insurance application and send it to an underwriter or send it to a quoting engine online.
Mm-hmm.
And discovery is all of the intangibles. Discovery is figuring out, who is this person? What do they care about? How do they make decisions? What is their level of experience? Are they a sophisticated buyer, or are they a price-driven, unsophisticated buyer? Are they a rookie in their industry, or do they really understand? Are they savvy and they know exactly what they're doing? Identifying those discovery kind of characteristics as early as possible is really the most important thing. For us, figuring out where they are in the process is really important. One of the questions that we always want our agents to ask is, if you don't mind me asking, where are you at in the process? Are we the first office you've called, or do you already have quotes in hand from somebody else? Though that's basically word for word what we want them asking. Because if they say, oh, you're the first office, then we say, wow, thank you so much for calling us first. We really appreciate that. If you don't mind me asking, why'd you call us first? What did we do well in the marketplace that made you call us first? And then everything they say from there, pay close attention, because they're telling you what they value, because they chose to call you instead of everybody else out there. And if they chose to call you, it's probably a good idea to figure out why they chose to call you instead of your competition.
What if they say no? They say, hey, I've got quotes in hand.
Great. My first question is, cool. Why haven't you gone with one of those? You have quotes in hand. You've obviously chosen to not go with one of those yet. What are you looking for? What has not been delivered that you are hoping to receive? Because then we figure out what their target is. And because they're going to tell us something that's mostly true, they'll probably withhold information because they don't trust us yet. And using what's called an accusation audit, it's from Chris Voss's book, Never Split the Difference. And it's the kind of question that's designed to be a little bit absurd and go further than you anticipate the client is actually feeling. And it is something along the lines of, John, let's say your name is John. John, I imagine you've probably been burned by insurance agents before. You're probably coming into this conversation thinking that I am slightly less toxic than a used car salesman. Would that be a fair guess? And he's going to laugh, which is the whole reason to ask that question. You're going to say, hey, I'm going to be totally straight with you. Our entire process is built on transparency and collaboration. What are you looking for that you haven't yet received? Because it's my objective to figure out if you're the kind of client that we work well with, and if we are set up in a way that I think we're very likely to deliver on your expectations. Because I want you to be happy, John. I don't want you to leave 6 months from now. I lose money if you leave 6 months from now. If you choose to do business with us, John, I'd love for you to be here for 3 or 4 years. So do you mind sharing with me how you're going to make this decision so we can have a long-term relationship rather than something totally transactional that you can get just about anywhere? Because I'll tell you straight, John, if all you're looking for is a low price, guy down the street can give that for you. But we deliver a lot more than just a low price. So if you don't mind sharing with me where your head's at, I think it'd be useful for both of us.
Yeah. You said, man, discovery. You're really trying to figure out what the person wants, and they'll tell you that. They will tell you that. You just got to ask the right questions for them.
You have to give them freedom to piss you off. You have to explicitly give them freedom to offend you. Because if you want the real answer, you have to be okay with having your tail feathers ruffled from time to time.
For sure. So what? I'm two things, right? So you're doing business insurance, of course, roofers, contractors, all that stuff. Second thing is the real estate side of things, and this is where I'm really because remember when we were captive agents, man, we were doing auto, home, umbrella, hospital income, life insurance, investments, blah 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 blah, right? Like a bunch of different things.
Yeah.
When we came on the Indie channel, man, I told our team, I said, guys, we're doing homeowners insurance, and that's all we're doing, and we're going to be the best at homeowners insurance in the country.
Yep.
Obviously, auto comes with it. This because that's kind of where our bread and butter is, and that's all we do. We've always wanted to get into life insurance, just never got into it, just never really. You've separated both sides, so you're almost like running two different businesses in some capacity. The education is different on this side. The education is different. How's that going for you, man? Is that tough to run two different simultaneously?
I think it's two different flavors of ice cream. One of the biggest things that we have done that makes it easy from a keeping score perspective, from a process perspective, is 100% of our scorecard is based on revenue. We don't care about the line of business. We track it, obviously, but we
Mm-hmm.
keep score based solely on revenue, not item count or premium or anything else. We keep score based on two things: commission revenue and fee revenue. What's our average account size? How many accounts do we have? What is our conversion from one stage of our sales pipeline to the next? We pay close attention to the bottlenecks in the pipeline. If we're averaging a conversion of 80% to the next level of the funnel, from lead to suspect, from suspect to prospect, from prospect to delivered, and then either closed won or closed lost.
Yeah.
And if it's closed lost, is this closed lost remarket, or is it closed lost dead? As in, we lost them and we're not upset that we lost them. We don't want them. So keeping track of where those numbers are in the funnel is way more important than whether it's REI or real estate investor or commercial. Because for us, the processes are different, but there's a lot of crossover too. Sure. I mean, for just about every real estate investor at some point is going to act as their own GC and need a general liability policy with a $2 million excess or umbrella. So many of these folks that are on the business side of things. A dentist is probably going to own investment real estate at some point. If someone is an attorney or an accountant or a financial advisor, if they're a white collar advisor, it's almost guaranteed they're going to own real estate. Yeah. It's just what they do. For sure. So the crossover is pretty significant. We don't get lost in the two different flavors of ice cream, because at the end of the day, whether it's Rocky Road and going up against strawberries and cream, they're both ice cream, and the way you eat ice cream is identical, just different flavor.
Different flavor. I love that, man. That's a great analogy. Do you work with other insurance professional insurance agents, I guess, on the independent channel that maybe don't want to get into the real estate world, but maybe they have a couple of clients that they really can't mess with or whatever? Do you have the markets that they don't all day? Okay. Yeah, I just want to make sure, give you the ability.
Our number 4 marketing source in our entire agency is other insurance agents. So depending on the level of participation, depending on how much work goes into it, it's either a fee for the referral, or it's simply hey, we're going to take good care of this client. We're going to make you look good. Don't worry about it. Carry on about your business. We'll send you an email when it binds. And that, depending on what level of engagement the referring agent wants to have, depends on whether it's a paid referral or not. And if it is a paid referral, is it a first year only pay, or is it ongoing? Are you going to help us collect documents at renewal? Are you going to be a liaison for that account? We almost never do that, multi-year referral. It's almost always just 25% of first year revenue that we pay at the 6-month mark. And there's no cap on that, So if the referring agent sends us almost all of what we need to go to market, then you're going to have a nice referral fee at the 6-month mark. And we don't want to have a chargeback, obviously, because nobody wants to have a chargeback conversation, which is why we wait 6 months. Because our data has shown that if the policy remains active for 6 months, it's very unlikely to cancel before renewal.
That makes complete sense. So what's 2024? End of 2024, man. 2025. I know we're at the end of time here. What's that look like, man? For Riskwell, what are some goals? What are you thinking of the insurance market next year and a half?
Yeah. Now for us, it's mostly looking at who's going to join the team via recruiting and who the acquisition targets are, who out there is open to joining forces with Riskwell and coming alongside of us, coming under the Riskwell brand and helping us grow organically. Obviously, is definitely going to be a big part of it in 25 and beyond. But growth by acquisition, finding like-minded people who fit culturally, who want the same things and have compatible values and compatible ways of doing business. I've have some people behind me that have basically given me a blank check and said, go find the right people and we'll, finance acquisitions and, roll people up and blow this thing up and make it a big enterprise. I'm just trying to be like you someday, man. I know what your head count is. I know what you got going on over there.
I don't know about that one, man. Dude, I love the name Riskwell. We talk about this all the time. My agency here, current agency, is called Jaffery Insurance. And the reason I love Riskwell is because I just had a conversation with a very large auto dealer in Omaha they do about 2,000 autos they sell a month. So
Wow.
they have a Goosehead model, they have an Allstate model. They're both failing, and we're going to go in and kind of solve some things for them. And I was like, I'm trying to get them under the Jaffery umbrella, and it's kind of a national account. And I was like, man, if my agency name was Riskwell, this would have been such an easier sell. It's extremely difficult to sell my last name agency. So I appreciate what you do there, man, with the Riskwell name. So,
dude, the branding conversation and the way that you go to market, the way that you present your vision and values and the mission of your brand, that is an entirely separate conversation. But it took us 6 months to settle on the Riskwell name. For the first 6 or 8 months of operation, we were known as James Jenkins and Associates. Which obviously is a terrible name. It's awful. It's like, are you a small town law firm? No, we're
from farmers, dude.
Oh my gosh, it was so farmersy. No, but once we settled on Riskwell, we'd never look back, man.
Love
so
that name.
I know we're out of time, so you guys are going to put my stuff in the show notes for anybody that wants to reach out. Feel free to hit me up at james@riskwell.com. Facebook, LinkedIn, whatever. And that's probably the easiest way to find me. And thanks for the invite, man.
Dude,
this was fun.
James, I appreciate you, man. You crushed it like always. And we definitely have to do this again. Will you be at ITC by chance?
I will not. I will be running my shop and selling policies.
There we go.
I've never really done
money.
the ITC thing, but for your quotation thing, it totally makes sense why you're doing it.
It's my second one, I guess. I'm going two conferences this year, man. Look at me growing up. Man. Dude, James, appreciate you, man. Thanks for being a good friend, man. Thanks for what you do for the industry as well, man. I know you give a lot of feedback. A lot of people will reach out to you, man, and people say a lot of great things about you, man. So appreciate you and what you do.
Excellent. Thanks, bro.
All right, brother. Talk to you soon.